Good morning everybody, Pope Binary here, and today I'm going to give you more price action live trading examples. I'm a big believer in teaching by example, you know what I mean? It's the same with leading, leading through example is the best way to lead, and the same as through teaching. So what I'm going to do is, like I said, just some more raw price action, and today I'm going to try and, I watched my video yesterday, and the thing was I didn't really explain the trade, so I'm going to try and do that a little bit more today. So before we jump in, here's the quote of the day. There is no asphalt boulevard to success in Wall Street or anywhere. That's from Jesse Livermore. So without further ado, here are some more examples. Okay, everybody, got some more price action. As we can see here, there's an engulfing candle forming in a double bottom pattern. We can see the market pivoted over here. So what I'm going to do is I'm going to enter a contract at the 2650 strike, which is this strike. And we'll see how it turns out, saying the market is going to rise in the next 5 minutes. Okay guys, we're 30 seconds past the close of the period, and like I said, the market initially when this last candle started forming, it was down here, but then it bounced all the way up to this value, and I was able to exit the trade at the 92 max profit. And believe it or not, because the market initially bounced down to this value, it bounced down to the strike price, I was able to get this contract for $50 on a call, and I sold it to somebody else for 92. So help me on the math there. That's what $40 profit-ish, somewhere in there, but regardless, it was a good trade. As we can see, though, the market right now in the next period, it's starting to fall, so it's a good thing. Like I said, I strongly recommend exiting your trades if you hit max profit, because if this candle had formed 10 seconds later, I would be sitting out of the money and I would have lost all that money. So I recommend taking your profits. Alright guys, second example for you here. We've got a nice rebound off the daily open, and as we can see, the market is turning bearish. There's a bearish engulfing candle forming. Actually, you know what? I'm going to use this example as a trade I'm not going to take. Reason being, while this is appearing as a clean setup, the move is too big right now for me to take it, because if the bears continue to push this market down like they're doing now, then there's a good chance the bulls are just going to rebound it, and then you're going to have a losing trade. So here's an example of a trade I would not take. It looked really good about 10 seconds ago when I started recording, but the move has already happened, and I'm just going to let this one go. Hey guys, and here's just a follow-up. This is why you do not take those trades. While it did look like a clean trade, the move had already happened, and the bulls, like I said, they just completely rebounded it all the way up here. So if your spidey senses are tingling or whatever, just don't take the trade, you know what I mean? Hey everybody, just entered this trade. I know it's going to seem a little sketchy, me coming in a minute and a half, but I promise y'all I entered this trade. For this third example, this is just a breakout candle. No two ways about it. And so I find usually in the markets, if you see a breakout candle, well, a lot of breakouts, they fail, but at least in the next 5 minutes, I can tell you that the breakout's going to continue, because breakouts usually don't last 5 minutes and then immediately, just switch directions. So I went ahead and put my strike price is at 115.05, and I got, or 115.15, pardon me. And I got the contract for $30, saying the market would fall, and I should be sitting in some nice profits, although I'll hold this one to expiration, because breakouts, like I said, there's just so much bearish momentum in the market right now, as indicated by this huge candle, and so we'll see how it turns out. Alright everybody, 30 seconds past the close of the period, and like I said, just too much bearish momentum in the market for the market to just suddenly switch directions, so I got that contract for $30, and get this, somebody out there put in a working order at $1, meaning I was able to exit the trade like 2 minutes before expiration with $1. Essentially, I paid $1 to take all my maximum profits off the table, which was nice, even though, holding it to expiration would have won, because my strike price was all the way up here. The market never even touched my strike price. So clean trade, clean breakout candle, clean example. On to the next one. Okay, everybody, got another double top pattern in a bearish market. Just clean setup. What I'm going to do is, we're still 2 minutes out. I'm going to wait for bullish response, and then I'm going to say that the market will continue to fall. Because whenever you see a move like this, there's going to be some sort of bullish response before the market falls. So I'm going to wait for that to happen, and then I'm going to say the market's going to follow. So I'll cut and show you all how this one turns out. Okay guys, we're about 40 seconds past the close of the period this time, and like I said, it was just a double top pattern with nice engulfing nice engulfing bearish candles in a bearish market. You know, this pattern, literally, this has been like the highlight of the past few price action videos, just because this pattern repeats itself endlessly every day. You just got to wait for these setups. So like I said, just clean win, clean setup, clean example. Nothing more to say there. Okay guys, we're about a minute into this example here, but I've already have a strike price at 115.17, which is up here. I got it for about 30, saying the market would stay below this line because this is a double top pattern in a bear market. Shocker that I'm using this pattern again, right? But we'll see how it turns out. I'll show you in just a second. Alright guys, the period literally just ended, as we can see, and that's just another win. I cannot stress to you enough, the easiest price action pattern is a double entry in a bear market that agrees with the current trend, right? The trend is down, double top, bet down, right? The market is still falling. It didn't even touch my strike price up here. It's such a strong pattern. I cannot stress to you guys enough to use this pattern. So, clean trend, clean win. On to the next example. Alright guys, to wrap this video up, today, you know, I've asked some people ask me, you know, about my losing trades, and I am not a perfect trader. I want to let you guys know I lost 2 trades today, and what I'm going to do now is I'm going to try and scroll through the charts to try and find them right here, okay? We see how there was a pullback all the way down to the resistance line, and then I saw a big engulfing candle, so I already thought there was a potential, you know, double bottom forming here. It bounced off the EMA, and then we can notice there was a bearish candle that pushed it all the way down, and then I saw a second engulfing bullish candle. So I was like, all right, you know, it's a double bottom inside a double bottom, if that makes sense. There was a double bottom here, and then we could see it went up, down, and then I was like, it went back up, and then I was like, all right, now we're gonna really start taking off. And then, as we can see, there was a big loss. Wasn't that big a loss. I think I got the contract for a $60 value, which means I lost $60. I actually exited the trade early for a $20 loss, so I only lost $40 as a one-to-one risk, but even still, it always sucks to lose, you know. So that was one trade I lost today. And then the other one, let me try and find it here. It was actually this one. Yeah, it was, because I got my strike price was right here at the 1.26810. It was just above the close of this previous candle, you know, because like I said, I thought there was a double bottom. There were 2 big wicks rebounding off the daily open, and then I saw this big green candle, and essentially I just placed my strike price too high. I should have gone with the safer strike, which is down here at the 1.2679. That obviously, as we can see, that would have been a winning trade, but my strike price was just too high, and I ended up losing. I think actually on this one I lost quite a bit of money, because at one point the market was already up here and I was late to get in on the trade, and then of course the market consequently fell away and I lost the trade. But that was my own fault. I shouldn't have picked a strike price there. So those are my 2 losers today. I think I've showed you all 5 examples, 5 wins, 2 losses. Good day for me, and I'm about to go cram for some calculus finals here at college. But best of luck. I hope you guys found this video informative. If you did, please like and subscribe, and I'll catch you all in the next one. Pope Binary out.